All right. Welcome everybody. Just doing a quick mic check and video check, making sure everything is coming through as it should. And I believe we're good. Michael, how are you? Welcome. All right. Dina, yeah, I finally managed to go get a haircut, you know. Between trading and work and working out and kids, there's just no time to do it. But finally, Hamali got a little 10 minutes to do it, so thanks for that. Denislav, good to see you. Welcome. Okay, guys, let's get started. Okay, before Juan Carlos, welcome. Good afternoon for you. You're welcome. Bruce, Ivan, German. Jesus, wow! What a group we got today. Guys, before we get started, remember, if we're going to do anything here, nothing I show here or say here is meant to be a buy or sell signal. Only for educational purposes, I want to show you the way I approach the markets, read the charts, identify key levels, and hopefully you can take some of these principles to your own situations. Do not follow along if we get into any trade or something like that. Just make your own analysis and be responsible for your own trading. With that, on every Monday we go through the calendar. We see if we have any fundamentals that we need to be aware of. And then we go into the daily charts and we try to find mid-term, long-term opportunities. Has been a lot of change in the market since last week, but we have a few interesting pairs to be aware of. And yeah, so let's get started. Before anything, guys, we're getting closer and closer to our live event in London. So if you're nearby UK, Europe, the UK, London, you gotta be there. It's getting closer. We just closed with the stand-up comedian. It's going to be it's going to do all the entertaining. It's going to be music and beer, and it's going to be super fun. And we're just running the test for the competition. It's going to be very solid. And of course, education. We got all the big names speaking. So make sure you grab your seat. Also, for a limited time, if you get a ticket, you also get a free evaluation account that will be given at the day of the event. So make sure you go in there, check the event out, and let's go into the calendar. And then I'll go to TradingView. I need to check a chart there just to make sure we're good on our end. Let's see if we have something to be aware of. Today, quiet day. Tomorrow, quiet day. New Zealand and Australia, there's the Anzac Day, which is the Memorial Day. So it's going to be holidays over there. CB confidence, volatility, not much than that. And then Australia, Wednesday. CPI in Australia, we had a few CPI announcements last week. Those were not very surprising. There was one, I think, that was a surprise in the UK. So we had a choppy week, but we didn't see any trend initiation. I think everything is lining up for next week. Next week we got the first week of May. We have a couple of cash rates. So we already have some of the predictions. Let's see, in Australia, the US, we have nothing. So only in Australia. Australia, we expect the CPI lower than previous one. So it's currently at 6.8. They're expecting 6.6. So looks like their interest rate is doing its thing and it's bringing inflation down. So that's why we might not see any hike on interest rates in Australia. So depending on the CPI numbers, that might change the next week announcement on interest rates. So, but this is something to be aware. We'll see how the technicals are looking on Australia. We'll see the key levels. I think we're about to break a range, and we might start a new impulse over there. GDP in the US expected lower than previous. We'll see how's the economy behaving over there. And monetary statement in Japan, not expecting any change. What else? German prelim CPI. So on the month to month expected to come lower. GDP in Canada. There's a currency pair, interesting, related to the Canadian. So we'll have a look. So in terms of news, I don't see a lot of, out of maybe the CPI in Australia, I don't see anything very interesting. There's of course volatility around those news events, but I don't expect any major or fundamental news movement around these announcements. If any, probably in anticipation for next week's interest rates announcements, but not because of the announcements itself. We can see, most countries are around or getting closer to the 5% interest rate. I think that's I don't think any country wants to go over that. We can see slowly how inflation is coming down in most of the countries. UK failed. Now, last announcement came higher than expected, but other countries, we see how the inflation is slowing down. We see the real estate market going down. People are putting leaving money in the banks, not doing a lot of investments, a lot of expenses. So it's working out. But of course, government want to be careful not to go too high with interest rates, so they don't put the economy into a recession or something like that. So, okay, just to be aware of those. And then I really want to look at one sec. I want to CAD CHF. CAD CHF. Because I want to see if I can get more data here that I got on the MT5. No, I think it's okay. Look at what levels we're trading currently. So on the MT5, and that's how far I can go. So Canadian Swiss franc, it's trading at a super low, historical lows levels. Okay, and I wanted to check if on TradingView I can get more data than I got on the MT5, but I think it's similar. So this is a very interesting pair, because when pairs go really low, and if we get an example from when pairs, let's say here we have the dollar franc. Okay, at this point when it went like to historical levels, we tend to see like a important reaction to it. Okay, so look at this level. So also I think also in the pound dollar we got something similar not far ago. Okay, we see this level is kind of an historical level, and that was more recent. So when we got into these levels, we tend to have like intervention from the governments to bring the money, to bring the price higher. So that might be something we might expect soon on a Canadian franc, because we are trading at very low levels, historical levels, and in those scenarios, historically, is where we tend to have those interventions from the government, and have a lot of money bring into the market, and creates that spike, that bump to the upside. The challenge with trying to time this is, you have nothing in the past to tell you, okay, if I go in right now, where should I get out? Okay, if I go in right now, where's my key level or support level, or how can I know how low is this going to go? Okay, so that's the challenge. So what I try to do is I cannot rely on any past information, because I don't have any key area or support from the past to say, okay, below that levels, that's past support, I need to get out. So I need to start reading price action to start looking for reversal signals. So I go to the dailies and I see nothing. Okay, dailies, we had this past pivot, we broke it already. There was also this past pivot, which is the same one. Okay, we're below that. Then I go to lower time frames, because I want to understand if these candles on the dailies are being formed as impulses or are weak movements. Okay, so let's try to go to lower time frames, and then the hourly tell us a different story. Okay, so what it looks like an impulse on the dailies, okay, like strong down candles, okay, bearish candles, it looks very different on the hourlies. Okay, on the hourlies we see those three candles are being formed very, very slowly, very, very weak, like in a channel. Okay, so this is kind of getting ready to be pumped up. And in terms of supply and demand, try to read like, okay, let's try to get close. Okay, so if we look at this movement down, okay, this little movement creates like a tiny supply area or a resistance area, but then there's this little spike, okay, that consumes the resistance. Okay, so that these kind of movements, okay, goes down, but it gets retested. So every time there's a like push to the downside and then a retest, that kind of consume the supply that it was waiting there. So when we have a reaction intervention from the government, there will be no resistance at all across this this channel to stop a strong movement to the upside. Okay, so the challenge, if I try to get into this market without confirmation, I really need to start getting very, very small, and maybe as long as we don't break this structure with a strong impulse to the downside, I can keep adding to that. In this case, what I'll try to do is to wait for that, okay, to wait for the intervention. That will be an aggressive intervention, because as we said, there's no supply, no resistance across this channel, so that will be an aggressive intervention, and then I'll wait for the first pullback. Okay, that intervention will create, okay, a series of strong impulses to the upside, but strong candles, like large candles like these ones right here. That needs to create a new demand area, and I'll wait for the retest of that demand area, and then I'll start to build into my long. Okay, so right now it's very, very challenging to try to jump into the market. I want to wait. I want to see that intervention, wait for the reaction to the upside, and then on this pullback to the downside, I'll start building into my long position. And then I will have a very clear, demand area, and then I will know I need to place all my stops below that demand area, and I will be able to manage risk wiser. And then once that pivot point is created, that's the classic trend reversal definition, right? We got a low, and that will be the first higher low. So that's like a trend reversal structure. Until then, I think I'll just keep on the sidelines. I'll stay on the sidelines, and I will see how this behaves, because even if I want to get into the short side of these markets, I can make it. Like I would be selling at the very bottom, and we all have parents who told us buy low, sell high, or sell high, buy low, and here we would be selling at the very, very bottom. So it wouldn't make any sense Not on any time frame. We see the 5-minute chart is a very, very, very long, persistent channel, so it wouldn't make any sense. Probably, if I really like, we would wait for these little pullbacks. As long as we think the channel is going to continue, okay, because there's some supply here or some resistance here, so we can wait for these tiny impulses and keep selling. But the risk reward is not great. But that's an interesting long-term setup. Okay, so on the dailies or on the hourlies, to wait for that reaction, that intervention to come, and then to jump in. Okay, so that's the cat franc. Let me go into the then Slav. You have something GBP CAD. Let's look at that. Where is it? And then Slav, while I look at it, are you looking to buy or to sell, or what you got there? GBP CAD. GBP CAD. Yeah. So what you're looking here? You think there's resistance? Are we going to go down, or you think we're pressing higher and we're about to break? Okay, so you're looking to sell. Okay, I think this is a good exercise. What we're about to do, it's a good exercise to understand that when we're gonna go short or when we wanna go long, there's enough reasons behind to go long or short. Okay, there's enough arguments to either go long or go short. Okay, if I wanted to go short, I'll tell you, yeah, the price has been there 1-2 times and held, and now if I go short, my risk reward is great because I can short, have a very tight stop loss above the resistance level, and my risk reward is great. And that's a valid reason why to short, right? Maybe I can look for maybe volume behind it or strength behind it, and you will find enough reasons why to short this market. If you're trying to buy, I can tell you we are forming higher highs into the resistance. Okay, so buyers back here, they bought at these levels, and when the market retraced, now buyers were willing to buy at a higher level, so they're putting more pressure into the resistance level, and eventually there will be no enough sellers behind this, and we will see the breakout all the way to the next resistance level. Okay, so both approaches are valid. Okay, and that's the important thing, and you will make, if you stay consistent to your analysis, you will eventually be profitable with your analysis as long as you stay consistent. But the most important thing behind this is, okay, if I go short, where do I get out? If I go long, where do I get out? And where I'm looking to take profits, and if that's something that makes sense. Okay, of course, if I go short, my stop loss is above the resistance. Okay, in case of the breakout, I'm out. And I'm looking to take profits here. Okay, I would be risking, just an example, I don't know, 90 pips right here. That's already 3 to 1 risk reward. Okay, and if we break the support level, we can go all the way down. That's a great risk reward ratio. If I go long, I can place my stop loss, let's say there. I'll be risking 300 pips. If I go my target with to the next resistance, next supply, whatever it is, we aim for 500. So that's a 1.6 risk reward. So does that make sense within my the statistics of my strategy, whatever it is? So that's how you make your process and your decision making process. So if you're looking to sell, then Slav, I would like to know where's your what would you place? Like, first, are you already in the position, or you're waiting for certain confirmation or something like that, and you going short? Where's your stop loss? And then I'm thinking, will I join you, or I will take the opposite trade, and next week we'll see who came up positive. Michael, can you look at Kiwi CAD after this? For sure. Let's look at Kiwi CAD. By the way, also dollar franc is trading low. It's similar to CAD franc, only not at historical levels. Okay, dollar franc, we have a very choppy market. I've been taking with Scott last week this impulse, and we saw there's nice supply were at those levels, and I was looking for opportunities to sell. And even this week, this morning I was looking for, or no, I was trading at the dollar yen, but at these levels, as we're approaching that supply, I was trading this next movement to the downside. Okay, that's something we did mention last week. I just entered after the 15-minute pivot, I'm sure, with a tight stop, 25 pips. That's what I'm that's what I'm talking. You can get into a very nice tight stop loss with a huge risk reward ratio. We just need the level to hold. And probably this week, when we don't have like major announcements, that might be the case. That might hold, and yeah, it's a good setup. Okay, we were looking for a New Zealand CAD. Let's look at that. And then we'll go to the other pairs. I've got some analysis to do with you. New Zealand CAD. These are pairs, guys that I don't really follow, okay, like closely. I focus on the majors. But we're clearly okay. So in the big picture, came for this from this impulse. Now this impulse is formed different, okay, because this is a weak movement of the impulse. Then we have a nice demand, okay, from this area. We had this nice push, then we had an extra push to the upside, and then we had the last push to the upside, which is there. Okay, we had a push, we rest, and then we had this really nice push. So this demand area has already been consumed. Okay, we tested it right there, and we're broken it to the downside. Okay, and we're getting into this next mid-range demand. We're around there. I just want to see how that movement was formed. I want to see if in this pushes to the downside there's enough supply, or we're just resting and compressing, or we're forming this channel, this very long-term channel into these demand areas, and we expect a push to the upside. So let me go to the down to lower time frames. We can immediately see that supply has been already tested, and other than that, it's not much. I mean, we have some there, then only there, up there. Let me go back. So we test that one. We have a little bit of resistance there, and we have that supply. But in order to go to that supply, we need to get into some demand area. So I think from that supply area and the one we pushed, we have the potential to go all the way to this mid-range demand, and probably there we'll get a reaction to go higher. I'm struggling to say if I would go short. I mean, we had the supply, we consume it already, and we're just resting there. So I think this is lining up for a movement to the upside. Okay, that would be my reading. I will be building into the long side once we reach this demand area, and I would get out if that breaks down, okay, below the area. But it's a bit early. I mean, we haven't created any demand as well, so we pushed to the downside, kind of turned, pushed to the downside, kind of, turned, and we're just consolidating, ranging to nowhere. Okay, so I see no demand, no supply. I don't know, I don't have a clear setup. I'll really wait for this to come to a more interesting area, and then from there I would read price action and make a decision. Michael, yeah, if you're long, I'm saying I would be long. I don't see reasons why shorting this. I think the supply has been failing. So my next setup would be long, but we have a bit more room to go down. So you need to be patient, because we could potentially go all the way to that area before seeing the turn. I mean, you see how we're not forming anything. Like, those are very weak movements to the upside. So we either, in anticipation for a very, for a news, probably one of the news announcements during this week will bring the volatility to the market and the volume to make a new movement. Other than that, if that's going to just continue, the next area is a bit lower than where it's now. All right, guys. There's the Aussie USD, which we said I was kind of short bias, and I guess I'm still short bias because of the technicals, and we had some news, but we're really switching to kind of neutral. But supply we marked this area last week or 2 weeks ago. We tested it, reacted from there. So supply is holding, not enough, no demand being formed. So my bearish bias needs to stay. But on the long term, we just stuck there in that channel for weeks now. So I'm guessing we're waiting for an announcement to make a break of that structure. We have that, and New Zealand USD is kind of similar. We also mentioned we want to be slightly bearish, so the market has moved to the downside, but not on a convincing way. We're the same. We're kind of trapped, and want to see how this unfolds. The rest of the pairs have been to be fair, they haven't moved at all. Like I stated last week that we might see a reaction from these levels only now. Like last week we spent the whole week around these levels. We didn't go anywhere. So right now we are approaching to that supply area that we mentioned, and that would be the divergence. We discussed the divergence setup on the hourly. The whole last week we didn't do anything. Now we're approaching the area. I wanna see how that movement is being formed. Okay, I wanna make sure we get into the key area, kind of what we're doing now. Okay, like moving up and down, up and down, up and down, a weak way, so I can short that area, and that will give me a nice setup, because I will be at the very top with a nice and tight stop loss, and price action telling me, okay, you're good to short. And something similar on the pound. We were forming the divergence We established it 1, 2, but we haven't tested the supply. Okay, supply is all the way up there. Last week we just spent the whole week going sideways, so I want to wait for market to come a bit higher, away on a weak way, and then I'll try to look for price action. I will give you the price action example of what I'm looking for, because I traded something similar just before the trading room. I'll show you the okay, you can see I was short in this area. I'll tell you why, because we're moving up to a key area and then we form the divergence. Okay, so that's the movement, that's kind of the setups I want to try to be aware of. So we had 1, 2, 3 kind of higher highs, but really a divergence. Okay, the week we had the reaction, and usually after those reactions to the downside we tend to have some continuations. And then I went to the 1 minute chart. After the reaction, you can see it's a strong reaction. I was looking for the pullback, and I like the fact that this pullback was formed again in a channel, in a weak way, going up. So I was shorting, and as I got the reaction, I banged the profits. Okay, so that was the setup. So something similar, I want to wait and see if I can grab Euro USD and Pound USD. Euro USD looks like it's on its way. GBP USD selling for a fall this week, I think. Your opinion? I agree. I don't want to. I hate getting married with my analysis. I just think the next movement is to the downside at this point. But of course, we could be wrong, right? I mean, last strong movement was to the downside. We haven't reacted to that, and we're not forming very strong demand areas. Like we had these impulses, but they haven't followed through, so they haven't evolved into a strong demand areas. And on the dailies, we had the opportunities already to move up to the upside. Okay, we kind of turned and just stopped, and we had these kind of daily formations that tend to have continuation, and those patterns fail to form. So there's a potential down movement coming again in front of our eyes. New supply, new demand, new money might come into the market and create new movements, unexpected, not related to our analysis. So if I was just about to pick a direction, I would pick sell, but always aware I might be wrong, and the next big movement from one of those fundamentals might move the market to the upside. There was a request for gold, and I was looking at gold previously. Let me bring it. Because gold is also at a very sensitive point. It has been holding the 2000 level. It's been trading around that area. Okay, so that's a level to always have in mind. And if looking purely at price action, I want to see, again, this looks like a higher highs, but I want to see if what's the strength behind. So let's try to get some help from indicators. Okay, so we're looking at this pushes to the upside, and we can see we have the opposite happening on the strength behind the movement. So that's a classic divergence setup. Okay, this is a weak movement to the upside. Each one of these pushes higher has less strength behind, and that's a potential turn to the downside. So that might be like the 2000 levels about to hold, Now I want to see how this push to the downside and this movement in detail. So the reaction to the downside, clear supply, similar to what we saw on pound and dollar. Okay, we see strong movement to the downside and just a lot of look at this. We have strong movement to the downside, a lot of time to go up, very sharp movement to the downside, a lot of time to go up, sharp movement to the downside. In this case, we did have a nice reaction to the upside, but after that, slow movement to the upside, strong push to the downside. So we can see every time the market is going down, is going faster than when it goes up, meaning there's more sellers behind this market, and I would align myself to that. I mean, like, looks like there's big money trying to hold this market below the 2000 mark. So every push, every pullback to that area, or as long as we stay below here, I'll try to short. So those are the hints I get from the market. Fresh supply, stronger pushes to the downside than the movements to the upside, and the divergence on the dailies, okay, that we identify. And we could target mid-range demand or extreme demand down here. So any pullback, I would be more than happy to short the market, to short gold. Things like I sometimes I'll look at the dollar index, but after, if you read how the dollar index is formed, you will see most of it is the euro, and sometimes then the pound. So many times the dollar index looks like the whole opposite than the euro. So making an analysis on the euro USD, I can kind of get an idea on how the dollar index is going to, like, it looks. But yeah, I do analyze the dollar index. Okay, let's see if we can find anything to do. Probably on gold, we'll find our setup. It's moving nice, huh? I don't tend to do a lot of scalping on gold. Let's see. So just what I'm seeing on the 5-minute chart, we had this last reaction on the hourlies. We've tested that already, and we're currently forming this movement to the downside, and you see there's some support, but nothing like we should be getting into. Okay, we might be there. We're testing that area. So we should, okay, and then we have the extreme level. So on our way to that level, this direction to this level might be the pullback. I wanna wait for a pullback to short the market. Okay, as long as we stay below this area, I'll be happy to keep shorting. If the market suddenly gains momentum, starts breaking that level, probably that level, then I'll be wrong. But I'm waiting for a little pullback towards that area, and I'll start building a little short position. And by the way, I'm going to be explaining my scalping strategy more in detail on a webinar next Tuesday, not tomorrow, May 2nd. So we'll get some emails regarding that. It's going to be like I get a lot of requests on how do I position and scale out and do my scalping strategies. So I'm going to be covering that in a webinar next week, next Tuesday. So make sure you register for that. And then that same principle I really apply to all my trading, also on my larger time frames. I position myself the same way. Okay, I try to look for these potential entry levels, and instead of going all in one entry point, I split my entry into different levels and I scale into my position. So in this case, I'll be looking for to add a little bit, maybe here or around this area, and then again at this area, everything within the pattern, which is I'm waiting for the pullback and then the retest of the lows. Okay, so every pattern has like different entry levels, so I will try to explain my technique. Now the exit. So that's not a great entry. Okay, that's just like my testing of the market, and then exiting. Must be around that week. Okay, that's a reaction. So around there, or if I had more than one position, I could split my exit in different exits, and then I would target this area as well and this area as well, like trying to scalp and mix my exits. But I only have one at the moment, one position. So we'll see how that works out. Yeah, I did, Michael. Okay, now let's see if there's a reaction on that level. Yeah, I'm feel comfortable shorting. We just did the whole analysis on the gold, and we see from the dailies we have divergence. On the hourlies we have much more supply than demand. So now if I'm trying to look for opportunities in the market, like gold, I'm comfortable going short. Now I just need to find those entry points and that setup that allow me to capitalize on that. So around this area I need to see the market slowing down and potentially turning. If that breaks, then it will go all the way to the next area. So at that point I want to be more I want to slow down on my entries and if that fails, I think I'll cut it. But I'm counting on sellers being active around this area. Okay, and that might be the reaction. Okay, you see how we entered the selling area, and we saw the reaction immediately. Now, if that goes back up again, I might need to scale out of the trade, because we'll run the risk to break to the upside. Okay, so I might take one of these off, and then my first entry, which is just like a bad entry, I can also take it off and then try to swing the other position. But never mind, that was the setup. So these kind of trades, guys, scalps, I just do that on a daily basis with larger and larger sizes. That's how I build my account. So I'll try to explain that on a webinar next week. But I think with that we'll wrap up. Let's just see. Yeah, that was the gold trade, and that was the previous yen trades that I mentioned. Diana, I haven't looked at the DAX lately. Yeah, it's hard to tell, because it looks like it has gone into a very high, and there should be some reaction to that level, to that past levels, but they don't look very, very strong. I think we've broke there was a chance to to reverse back here, and that failed. And I think we have room to go all the way to the tops of this area, maybe that spike or that spike there. But the movement as a whole hasn't been very strong as well. It has been very small candles moving up, so hard to establish a bias just from watching the dailies. But if you're short and in drawdown, first, we all get into drawdowns. Okay, drawdown is part of the game. The question is, where are you going out? So I think on the dailies, if I was short, I would have to go out above those levels. The question is, how big did you go in, and if that allows you to get to hold into drawdown all the way to those levels. Because the turn might happen anytime, might happen there or there. We might see the turn you're looking for, and so we would have to wait. But in case that doesn't happen, you need to be aware we are just cutting this. And if you shorted basis on the hourlies, just expecting that to hold. So again, you need to get out once we break that. I don't know really how to tell. Let me tell you, from the hourlies we had this push to the downside, and this is fresh demand. Okay, we came from compression, reaction to compression, that's fresh supply, and that's fresh demand, and consumed it completely invalidated the supply. We reacted a little bit from that, and now we're like kind of continuing to the upside. So this might actually have some room to go to the upside before turning. Just looking at this last movement, we're coming from this demand. But as long as as long as your signal is telling you this is valid all the way to a certain level, just hold it. And if you're losing confidence in your setup, scale out. Okay, take a partial loss. Okay, guys, I think we'll wrap up. Diana, we'll send out the link. I don't have it with me, so we'll send out the link for the webinar. And yeah, thanks for coming, guys. Thanks for staying. Always a pleasure, always fun, and I'll see you next week. Bye bye.